Mr. Walker, private mortgage insurance helps first-time and I would say working-class buyers access home ownership, and it safeguards taxpayers from credit risk. It's kind of the original form of credit risk transfer, I guess you could describe it as. The industry has grown more resilient through consistent mortgage insurance CRT transactions, which has been, I guess, ensuring support for new buyers and claim payments during all kinds of economic turmoil. Can you discuss how mortgage insurers use CRT to manage risk, and how has it made the housing market stronger? And then that would also include forward transactions covering any of the future business and how it has supported efforts to diversify the industry's capital base.
Thank you. That's a great question. And I would agree with your statement that private mortgage insurance is, an original form of credit risk transfer, which is an important note. The mortgage insurers have actually gained the same benefits that we've been discussing here today from credit risk transfer that the GSEs do. And most importantly, you've heard all the panel members here talk a lot about diversification. It's effectively taking what is largely monoline mortgage risk in a private mortgage insurer and sharing it and spreading it out with a bunch of private entities, either in bond form or in reinsurance form. And so the mortgage insurance industry has really leaned into credit risk transfer. They've been consistently purchasing it since 2012 or 2013, and they use it to transfer both risk and get favorable capital relief from those transactions. In the last couple of years, they've really leaned into forward reinsurance protection, which provides them coverage on loans that they will insure in the future. And that's very helpful to them because it gives them clarity and certainty as to the amount of protection that they have in place, as well as the price of that protection in place, which has really been a huge benefit to the mortgage insurance industry and has made them much more resilient compared to pre-Great Financial Crisis, where they retained most of the risk themselves.
Very good, thank you. Dr. Wachter, I believe that credit risk transfer can play a role in continuing to ensure Fannie and Freddie are significantly less risky than before the financial crisis. But I think there is a concern about CRT, that it's been underused tool by them in recent years, I guess you could say. So what are your thoughts on CRT using Fannie and Freddie, particularly regarding concerns of the ability for CRT to be counter-cyclical and prepayment risk eroding coverage? It could be, I guess, characterized as under-collateralized counterparty risk. I know it's that question's kind of all over the place, but if you could try to respond to that.
Thank you so much for the question. The use of CRT can evolve over time. It already has. It's become more sophisticated, and it can evolve further. But the use of security CRT, which I will base my response to your question on, definitely it depends on the capital rule. Many economists, there's a consensus among many economists that the capital rule is too stringent and may actually be undermining of future profitability. If so, and I do think capital is very important, obviously economists agree on that. CRT is not a substitute for capital at all. But if the capital rule is less stringent, there will be more of a role for CRT. So I see that as a likely happening going forward.
Very good. Mr. Vidiovich, do you believe that Fannie Mae and Freddie Mac's regulatory capital rules are sufficiently aligned with the actual credit risk characteristics of the underlying mortgages, such as loan-to-value ratios, borrower credit scores, debt-to-income ratios, and product structure?
Thank you for the question. In our view at the RAA and in the reinsurance industry, we think the GSEs have effectively used CRT to address and align interest along the lines that you've described. But as Mr. Walker has stated in answers to his questions and testimony, we think there is additional opportunity to leverage the private markets